following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
To email me and complain about talking about Billy Ray Valentine and trading places and Lewis Winthorpe III. It's not going to work. This is all part of my memory bank, and I enjoy it. I do this for fun, not for profit. So you can complain about a lot of things, but let's not complain about that, okay? There's a lot of other things you can complain about, but that's not one thing you want to complain about. We're going to start the day here like we always do with the DAX. As you can see here, we have made a Gartley pattern this morning, and we've started to the downside. Whether we're going to continue in that direction or not, I really don't know whether that's going to be the case or not, but we'll be able to see. As we get into some of these stock stuff a little bit later, we are in a downtrend. The $64 question is how far we're going to go. And my assumption is most probably towards the about 2 weeks from now is where I expect a bottom to come in. That's what I would be looking at. So we'll keep an eye on that as we go through here. Now, there's a market that is in some pretty serious trouble this morning, folks. It started on Friday, and that is the gold market. As you can see, we made a big ABCD pattern up there, stopping exactly at the 1.618 expansion number of the move down from April 27th. Let's try that again. March 27th into March 31st, we made that 1.618 expansion, and now we've broken below the 1250 level. We've broken below the actually we broke below the 1249 level also. So that tells us that most probably that 61% retracement that we made on Friday that looked like it might be a bottom, which we didn't think it would be because of the fact that it was heading down so strongly. We dropped more than one harmonic number, folks, in a matter of about 5 hours. That's very, very unusual. So my assumption is we're getting ready to make some a little bit larger correction in the gold. And another thing that happened in the gold market that is pretty interesting, if we look at the daily chart here in the gold, it's even more ominous, because if you take a look at this closely, you'll see the red lines that we have there. That's where we have the ABCD structure from January through April. That came spot on. Hold on one second here. We have a little bit of a problem here. Okay, Jay Bird, you got me on that one. That's a good one. Unfortunately, we've got to keep on working. I'd like to be able to share it to everybody, but we got to keep on working. Anyway, if we look at the gold market here, we've had this big ABCD structure finish up, and also we look at the shooting star pattern that we had, folks. The last time we had one of those was on election night when we were up about $40. And then we proceeded to drop about $40 in about the same amount of time, and that started a drop of over $200 an ounce coming into December. And so this is a downtrending market. If you just looked at this on a longer-term basis, over the long-term daily going back from June, this would be a 135 pattern, and the shooting star pattern was near each of the highs. So you have to pay particular attention to this market, because I think we're going to pull down into the area. The most logical area now would be equal to what we did on the last BC swing. That would take us down into the 1220 level. That would be down, let me see 75, see 85, 75. That would be, if you get down to around 1205, that would be down $70. That's two harmonic numbers, and that would be right at a 78% retracement of the move from March, and that would equal the move down that we had during February and March. So I can't see any reason to be buying gold today. That's the bottom line. Now, I wanted to I want to get into silver. Before I get into silver, I want to talk just a tiny bit. I had an email about this big thing that's going on in the world about the war that started on April the 6th of 1917, World War I, and the implications of it and stuff like that. And I just wanted to cover it because there's a cycle out there, a 100-year cycle related to some of these outer planets that is a war cycle. You know, Arch Crawford talked about that last Friday, and it's been on the internet, several different places where people are talking about it. Folks, I mean, that's a 100-year cycle. Give me a break. You know, sometimes it's hard to get between 15 minutes and 30 minutes, let alone 100 years. So let's not go there. But what I do want to do, Norm Winsky was kind enough to send us a chart from April the 6th, 1917. He's the only person I know that was trading during that time. I think he was 22 at that time, but I'm not sure. We'll take a quick look here. This is the chart from the New York Times, and if you'll notice here, you'll see the yellow box up there where it says April the 6th, and that was the start of World War I. And you'll notice how the market started to go down. But if you go below that, you'll see the Dow Jones, the industrial average there. And you'll notice how it made a perfect A, B, C, D pattern several months later. Now, the rails were still going down, of course, but the industrial average, you know, did make an A, B, C, D pattern. And it took out the highs of before the start of the war, and then it started down. So the reason why I bring this to your attention is that the news follows the trend, folks. I mean, that's basically the way I view technical analysis, because everything is available there on the chart. If people are buying, their prices are going to go up. If people are selling, prices are going down, and that's the key thing that you need to know when you're looking at these things. Just remember that just because the news, and we've seen this so many times, we're seeing it now. We're seeing it now in the stock market. Well, not in the stock market so much, but we're seeing it certainly in the bond and note market because rates are going higher, and yet the bonds and notes have rallied. But I believe that is that's going the way of the Kodak camera here pretty soon, because it looks like rates are going to start to increase. This pattern that we're seeing now in notes and bonds, I don't have enough time to cover it in this first segment here, but it looks very, very interesting, to see how some of these things are going to be happening. Now, I wanted to talk. We're going to have to do this just after the end of the break here, because I want to take a look here at the. Hold on one second here. There we go. This is from W.D. Gann, from my good friend Jim Flanagan, and it shows that the years ending in 7 have a tendency to be very bearish, and these are the years that you're looking at. You can see 1917, June 9th, that was the move down from April into June, so we had April, May, June. Down into that, we had a little bit of a rally, and then we kept going down for several more years. Anyway, we'll take a little break here. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we were talking about gold and the fact that it looks like it's in a position to really have a serious correction here. 1205 is what I would be looking for. That's down another $45 from where we're trading right now, but whether that'll happen or not, we'll have to wait and see. But the chart that I've just posted here, I think gives you a pretty good idea of where we stand in the precious metals. Now, silver trades about 1/6 the volume and open interest that we have in gold, but it's still a very easy market to trade. You have some slippage, of course, at times, but it is a very important part of the precious metals. But folks, if you don't believe in market symmetry and patterns, take a look at this silver chart over the last 6 months since last December. As you can see here, each of the rallies that we had have been absolutely perfectly equal. You can see that in that pink line. We had that one from December through January, absolutely perfect in time and price. We had another one from January to February, again, spot on. This one was off by about 5 cents in one day. And then, of course, we had the one Friday that was, again, spot on to the exact penny. So we had three almost perfectly equal moves coming in at a 50% retracement of the high that we made last June. What's interesting is, in the heat of the battle on Friday, when gold was going, bonkers, we got up to the 1275 level. Silver could not even take out the highs of February. It missed it by a penny. That, to me, is not very bullish price action. So that's another reason why I believe we're getting ready to have a pretty serious correction to the downside. However, on the other side of this flip coin here is that if we, for some reason, turn around and get really strong here in the next couple of days and clear above those numbers, whoa, don't be short, because we are going to go. But I don't think it's going to happen because of the fact that we're seeing this big divergence in silver. We're seeing the 61% retracement on the daily in gold, and platinum. Platinum looks like a, that's what they call the dead cat bounce. And believe me, the cat couldn't even bounce. I mean, this thing in platinum is incredibly weak. Look at this pattern. It can't even make a 382 retracement when gold is making a 61% retracement of the high from last July. Hello, Federal. that's not a very good sign from the bullish point of view. And then if we look at the XAU, the gold silver index, we're seeing also divergences telling us that gold and silver are not ready yet. And folks, no one's been more bullish than I have in gold and silver over the past few months, but now is the time not to be bullish gold and silver. That's just the way that I'm looking at it, from a technical perspective. And remember, I'm looking at just the numbers of what we're watching. Now, the reason why I brought that silver to your attention was two reasons. One is the fact that it had some beautiful harmony, but I was also helping someone do a webinar out of Europe and the last couple of days, and one of the things that someone in the room that was attending the webinar asked to take a look at silver. He said because it was a totally erratic market that, didn't have any harmony at all. He didn't use the word harmony, or I forget what the word he used, but he said there was just no way you could figure out what silver did. And I hadn't looked at silver that closely because I hadn't done the letter yet. So we started to, look at silver as a group. And boy, and after about 20 minutes, people were saying, "Oh my gosh, why can't we see this very often?" Well, you can, but the problem is you've got to be able to understand, how these markets work. They go up and they go down, and what you try to do is to find how they go up and down in the past, and then move over into the future and see if they do it again. Because the markets do nothing more than repeat over and over again, like the Bible says. There's nothing new under the sun, and I really believe that in technical analysis. But if you go back and see what the market did in the past, then take a look at it. Like right now, if you look at gold, gold shouldn't get above 1253 if it's really bearish. That's that's basically the bottom line on a short-term pattern today. And all I'm doing is I'm going back to see what previous breaks have been and see how the market rallies after that. So that's pretty much what you're watching. So we'll see. That's really what you're looking at. That's a very good quote, Mr. Z. That's from Top Gun. Evaluate what has happened so you can apply what you've learned. That's true. The smart man learns from his mistakes. The wise man learns from the mistakes of others. So be the wise man and not the smart man. Okay, we're going to move on here to the market. I believe that we are still in the process of filling these gaps here in the Dow Jones Industrial Average. As you can see here from this long-term chart going back to July, this is the Dow Jones actual. This is not the futures, and these are the gaps that we're talking about. We have there are actually 4 gaps here. We've already filled 2. We're in the process, I believe, of filling the 3rd gap right now. We finished a Gartley last week, as you can see, at 20,925. That was 270 points from where we are right now. And I believe we're going to get down this week into this 3rd gap, which is at 20,270. Now, I don't know if it's going to be this week or not because we have a shortened week, but that's only 400 points, and if we can move 200 points in a matter of a few hours like we did a week ago Friday, we could certainly do that. So 20,270 is the 3rd gap, and then the final gap that we want to look at is at 19,900. That was the day before we gapped up and finally closed strongly above the 20,100 level, as I recall, and that's what's moving. But the thing that's still important is that everybody bought on the emotionalism of the March 1st presidential address to Congress, or both houses. Those people are underwater, and especially those that have bought banking stocks. The banking stocks look like the most vulnerable of any of the stocks that I can see. Someone's asking a question about Amazon. Amazon, we were looking for a price objective of $8.96 in Amazon. We got up to, I believe, $9.20 and change. We closed at $8.96 in Amazon. The price to look at for Amazon right now from a technical basis, for those of you that trade, and these have great options to trade from what I'm told. I don't do those, but watch the options because it's much easier to trade those because the margin is so much better. But watch the price of $9.05 in Amazon, because if we don't get above $9.05 either today or the rest of this week, this tells me that Amazon could have made that monster ABC pattern that we've watched over the past several weeks that was given to us by our good friend Jim Bartolioni from V50 Partners. So, and that's one of the leaders of the Nasdaq, along with Apple, and of course Apple made new highs and then had a slight reversal and then a move down. I will talk about Tesla. Someone's asking a question about Tesla. I'll talk about Tesla after we have the break here. But here again, that's another, I guess that would you call that a niche or a click stock. And we'll see how that's going to work. Frankly, I'm not a big fan of Teslas. I don't trust any car that you can't hear. But, you know, I'm a Beach Boys fan, and Little Deuce Coupe is still the coolest car around. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look here at Tesla today. We're gapping up again. As you can see, it's trading at about $3.10 a share. That's still in the ballpark of the ABCD pattern that we've posted in here. But, folks, let me explain to you, and this is from our folks at Thinkorswim. Hold on, my alert is going nuts this morning, so give me a second here, and we'll see what we're doing here. Oh, Amazon just hit that level we're looking at, 905. So keep an eye on that. Keep an eye on Amazon. I've got to turn this off. Give me a second here, boys and girls. This thing's going nuts. as it usually does early in the morning. But I've got to keep track of some of these things. We just hit. Actually, it said 906 on the open. I don't see that, but we'll see. Anyway, 905 was the key price, but we'll watch that rather closely as we go through here today and see what's going on. Okay, but anyway, if you take a look at Tesla, the problem with Tesla, folks, is you can't short the stock. That you can't even borrow it. I listened to the folks on Thinkorswim and in the early part of the TFNN show, and they were talking about how difficult it was. And I don't do that kind of stuff, but I did check, with a couple of places, and they just, and these were big places like Interactive Broker, and you literally just can't find a place to or to borrow the stock in order to sell it short. And this was I don't know if you folks remember this. This goes back into the 20s, but in order to sell stock short, you had to borrow the stock in order to sell it short. The old thing from if you remember from Daniel Drew from the book Reminiscences of a Stock Operator, he that sells what isn't his'n must buy it back or go to prison. And that's what they talked about when they had these massive short squeeze in the railroad stocks, many, many years ago. So those are just a few of the things that you want to keep in mind, that if you want to try to sell something, you can't. But the only way you can do it is using puts, or selling calls and buying puts, debit or credit spreads, that type of thing, and then you're usually okay. But that's neither here nor there. We'll watch it closely here to see what's going to happen, with the stock. But it is really difficult, and when you have these gaps, that just gives you more indication that the market is extremely volatile. We had that big island reversal there that looked absolutely great, and then soon as it went back into the island area, that's what caused the problem to to make the thing go to the downside. So watch that. Be very, very careful of that kind of thing, because they can jump quite a bit. And when you're trading a stock like Amazon, you're trading a stock, $900 stock. A 1% move is only $9. So you've got to give a little bit of a credit to this on a thing. But 905 was the number I was looking at as a potential area of some resistance this morning if we opened higher in Amazon. So watch that kind of closely, because that's another one that looks very, very interesting from a technical standpoint. And I'm not making any recommendations here. I'm just giving you some ideas. Now, I wanted to cover something that someone asked me about a few weeks ago that I didn't get a chance to finish, and that is, how do you learn to think in probabilities? This is from my good friend Mark Douglas, and what does it mean to think in probabilities? When you're thinking in probabilities, you have to recognize that the market will probably have a greater probability of doing one thing or the other. That's all that really means. And that's a perception in our mind. So we assume that it's going to do 3 days up, 5 days up, 7 days up, whatever it happens to be. What you have to be able to do is you have to build a framework for making distinctions and interpreting market information. And that's part of what thinking in probabilities means. Your profits come from not one particular profit. They come from a string of profits or a number of profits over a period of time. And that's what you really want to work towards, because if you're going to rely on one particular profit to make your week or month or day, you're in big trouble, because you can't predict what the market is going to do all the time. You can do it some of the time, but you certainly can't do it all the time. And our profits come from recognizing patterns that have a probable outcome. We know that if we see a Gartley pattern, we know that the probability that Gartley pattern is going to work X number of times, and it's going to fail X number of times. So you have to put that into your thing. And finally, you have to take a responsibility, for putting those trades on. That's what thinking in probabilities happens to me. Golf is a perfect example. And look at the Masters yesterday. I watched about 2 minutes of it just to see who won, and I saw for this morning that Steve Rhodes posted that the dude, got a hole in one. You think they'd give him a car or something. Fortunately, I had a hole in one when I first started playing golf. But then when I got onto the hole with the clown and the windmill, things all changed, and I was never able to replicate that hole in one. Okay, folks, next to the next one, we can see what we got. All right, someone's asking a question about the potential resistance here in the E-mini this morning. Somewhere between the 2360 area and 2375 is what I would think would be resistance. We do have a tendency for the market to be in more of a downtrend than it is in an uptrend. That's basically due. Let's just put this up so we can take a quick look at it, because I think the easiest way to look at it would be to look at the E-mini S&P. You'll get a pretty good idea of this particular pattern that we're watching here. Just give me 1 second and we'll put it up here and take a look at it. We've got about 2 minutes to go in this segment. So you can see somewhere between that 2362 and 2370 would be some pretty strong resistance. And the profit objective on this hourly chart, possibly for this week, could get all the way down to a double bottom at that 2317 level. Now, whether that's going to happen or not, we don't know, but these are just support resistance points that we're looking at. So keep an eye on it. That's really what you just remember. In the land of the blind, the one-eyed man is king. So keep your eyes open, because these markets have a tendency to move. And we have a lot of news things happening all the time now. This is what April's all about, folks. If you remember when Norm Winsky was on, and also Bill Meridian, they all talked about the increased volatility in April because of the 3 planets that are moving in retrograde motion. And we have Mercury, I believe, went retrograde yesterday. Yeah, it sure did. And then we had, that was Saturn went retrograde on Saturday. Let's back up a bit. Saturn went retrograde on the 6th. We had Mercury going retrograde yesterday. And then finally we have Venus will be going retrograde on the 20th. And of course, we have a full moon tomorrow, actually tomorrow. So all of that will be coming together at the same time. So we're going to have some really big rocking and rolling, that's for sure. You're correct, Mike. Platinum is incredibly weak. It's just it just looks really, really weak when you look at all the others. So we'll see how this thing is going to move out of the way here as we go through our trading day today. So the stock market, that was just the S&P. The Dow looks actually a little worse. I'll put the Dow up here. You'll take a look at the Dow E-mini and you'll get a pretty good. Oh, this is the Dow regular.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market-Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we're going to talk a little bit. This is the Dow Jones regular, not the E-mini. It is showing you the Gartley pattern that we had here back on the 5th. That was a day that we had the market picked as a spot for a potential turn from our good friend Stan Hartley of Harley Stock Market Cycles, and then also Norm Winsky was on also on the 5th. I believe he was on the 6th to talk to us about that same type of day that we were watching. Now, I did want to bring to your attention something that is really cool, and that is if you get a chance, folks, go into the NASA's website, and you'll see these cycle sunspots. You can Google this. I'm sure you'll get a lot of different things, but this is shows you the sunspot cycles. We're at the lowest sunspot cycles we've had in a long time, folks. And as you can see here, this has the same cyclical phenomenon that we're looking at in stocks. I mean, this is really really an amazing chart when you stop to look at it. But we are in an area of lower times for stock picking, or for sunspots, and so keep in mind that that's on its way down. And remember, when we talked about this, Gann said, years ending in 7 were known as the death years, but we'll see if this is going to be the case, that we will have some type of a major bottom here in 2017, but we'll have to wait and see. Right now, we're having a pretty good rally this morning in the stocks, but that has a tendency to stop and not work right away. So you never really know. So they do say that these lower sunspots means global cooling. So we'll see. That's a big argument. Of course, with the global warming phenomenon and stuff. But we'll wait and see how all that turns out, folks. I wanted to bring another chart to your attention. This was, we had our good friend Greg Fisher on, who is the Andrews median line man, and he had some really interesting charts to show us when he was on a week or so ago. And if you'll notice here, one of the things that he was showing us was the fact that we have this median line phenomenon going on in the crude oil market. This happens to be May crude oil, and as you can see at this 53 level, it does have some really strong median lines. The median lines is, just you're dividing it in half and seeing the market repeat over and over again, much like we did when we were looking at that silver move. You're watching the harmony of a market spread out into median lines. The median lines were first brought to attention by Roger Babson, and then later on by one of his students was Dr. Alan Andrews, and they're on a lot of different trading platforms. They do work fine, but you have to learn how to use them, and they're just another technical tool, much like patterns or anything else. It's all stuff. You're the one that has to know where you're going to put the, what your profit's going to be, and how much you're expecting either to win or lose. That's the whole key, to watching these things. So we just never know which ones are going to work. the $64 question is we have to determine, you're the one that has to determine whether you're the one that's going to be putting the order in and making the profit or taking the loss, and you have the responsibility for that. All we do is to try to give you some ideas of what we're watching right here. So we're getting up here in the E-mini up around this 2362 level, which is very close to that first resistance spot that we'll be looking at. Whether that's going to mean very much or not, we'll have to wait and see. Now, gold did hit, came within just about 60 cents of the exact number we were looking at, 22.53. And then I want to check to see how Amazon is doing, just to see what's going on with that. We were looking at 9.05 and we're already at 9.08, so we've gone about $3 above that. Now, the most I would expect Amazon to move, if it's really bearish, is the 61% retracement comes in at 9.10. So I was looking at 9.05, just based on some shorter term repeating swings that Amazon has been going through. But keep an eye on this. If you're doing Amazon, if it gets above the 910 level, folks, this most probably is going to make a new high. So 910 is a pretty significant resistance area in Amazon. But boy, this is not a stock for the faint of heart. If you look at this, we're looking at a $900 stock, folks. It moves $20 like Little Red Riding Hood going through the forest pretty quickly. So you've got to be able to protect yourself with legitimate with a legitimate risk control, and that's the main thing that you might want to keep in mind. Now, one other question that someone asked me over the weekend in an email. We will take a look here at the Dow Jones Transportations. Don't look at this, don't trade it very often, but as you can see here in the transportations, we certainly have a market that is in a down move. We made a three drive to a top pattern back on March the 1st when we had the congressional speech. And since that time, everybody that bought that day has been underwater quite a bit. And we had a 6-day rally that stopped exactly at the 50% level. That also is, a pretty negative, I would think, because the other markets were able to, go up and make a little bit higher Fibonacci ratios at either 618. And of course, the NASDAQ, which has been the most bullish of all, was able to get up and make new highs like we did last week. And then we had, the big sell-off. Now, this is going to be interesting today to see what our resistance levels are going to be in the NASDAQ. I'm sorry, folks, I posted the bond chart by mistake because I wanted to get in to show you that is the three-drive pattern in the bond market. And let me get the NASDAQ one up here so that you'll be able to see it. They look very, very similar when you put them up here, but over different time frames, of course. And here is the NASDAQ. We'll get it up here loaded here, and you'll be able to see that. So I would think that we're going to have some pretty good resistance between the 94.50 level and 94.60 level in the NASDAQ. That's what I would be expecting. I don't know where it's trading right now, but I would say somewhere around 94.50 to 94.60 would be pretty good resistance in this because, we've got Apple is up and we've got Amazon up, we got Tesla up. So these are not cheap stocks, and these are stocks that they're not only they're cap weighted. In other words, it's not just price; it's the number of shares outstanding. So that makes a big difference because Apple is I believe, the most valuable of any stock now. I believe it's close to $800 billion the last I checked. So we'll see what's going to happen. With this particular thing that we're watching. Okay, so that's what we have going on so far. We got a couple other things that we need to cover. One of them is the historical PE ratios. This is from the Schiller, the guy from Yale, and Robert Schiller, and basically shows that there's only been one other time in history where we've had, PE ratios like this, two times, once in 1929 and again in the dot-com bubble of 2000, which was a once-in-a-generation. 877-927-6648.
I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have our good friend, Mr. Z from Philly. How are you, John?
Hey, Larry. Great to speak to you. This is your last segment of the show, and I wanted to ask if you could address the bond market, the 30-year bond futures, a ZBM7 contract.
Yes, I've got it posted in here, as you can see. But, John, I actually started my newsletter this week with bonds instead of stocks because this, to me, is the most important. These are much bigger markets than the stock market, and these are some of the most bearish patterns that I have seen in quite some time. If we take a look here quickly, let's just go to the notes because that's the really big contract. That's the largest of any of the commodity contracts that we trade. You'll see that we've made a beautiful 3-drive to a top pattern here over the past several weeks. That itself, you can see it pretty easily. The time sequence is absolutely perfect. But John, the one to really look at is if we go to a little bit longer time frame with the Treasury notes, and bonds look pretty much the same. They're a little weaker, of course, but if we take a look at the long-term weekly chart on the notes, you can see that we've completed that ABCD pattern at the 382 retracement. That was back into the November high that we had due to the election. And this market just looks flat out bearish. Now, if we're strong this week and take out these highs, this is all wrong. But if we close badly this week, this means rates are going to go higher and higher probably very, very quickly, which would surprise some people. But that's how I see it.
Would you suspect, looking at this weekly chart, that I'm looking on that weekly, the T-notes, you've got a double bottom, December and then first or mid-March, rather. Is your suspicion that the rally, that the bounce pattern is done and that we're likely to decline and fall underneath that double bottom? Is that the idea?
Yes, sir. Absolutely. That's what I'm looking at. Thanks for calling in, my friend. I appreciate it. Yeah.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.